Welcome to Limitless Trading. We wanted to set you up for this week so you can have a successful trading week. What we had mentioned before was that the Thursday low of last week, where trend changed at 55.31 before the contracts rolled, was a bullish trend change. We gave you the bottom. We said anything above 55.31, you buy the micro dips. Now we have 56.37 defending. On Friday, we said if 57.27 breaks down, which it did on Tuesday, was a great short. And then the beginning of OPEX, it broke down. It was a short, but you wanted to run your stop loss because, again, we're above support. We want to see 56.37 to break down, and then we can continue shorting. But as long as we're above 55.31, you want to keep going long, running stop losses, so on and so forth. So if you went long with us, again, from 55.31 and risked on at 56.37, as of this recording, we're gapping up a little bit. Which I'm always very cautious. When you have a gap up, you want to wait to have at least that gap retest and fail. So if we go under 57.27, you can risk on a short back to 56.37. But again, we're on an uptrend. We're more likely to defend 57.27 into our ultimate target of 58.13 and 58.55 and so on into CPI. On the smaller time frame, again, we said that if 56.50, 56.37 all defended, which is exactly what happened on Friday, was a huge bear trap where we're going to keep going up and the market is going to want to ultimately backtest this FOMC spike, right? Nothing has changed from when Powell spoke. So the market's going to probably want to backtest 57.71 and have a breakout, or to test it, reject it, come back, fill this gap at 57.27. If not, again, trend is your friend. If we keep defending these supports, you want to keep risking on. Now, you don't take a long at resistance. You wait for at least a backfill of this gap up into the morning session when New York comes in and say, okay, if 57.27 holds, do I risk on to go back to 57.54? So on all the smaller micro time frames up to 57.71. 5800, 5813, which is ultimately where we want to go short into CPI. If 57.27 becomes resistance on the smaller time frame, then again, you start shorting 56.94, 56.50, so on and so forth, and you bring her back down. But trend is up. You want to wait for a trend to break on the downside and then become resistance before you start slapping shorts. Because if you start shorting here and shorting here and then shorting here all the way up to 1500, you're gonna be buying your put forever. Now we're also looking for a short after CPI. CPI should be bullish in and then bearish out on more tariff talks after the second. But it's possible that they back down on tariffs. So we don't know. Don't assume. Let the level speak its mind. If we gapped up and you were long, just keep trading those stop losses, keep taking some profits, and let the market do what it's going to do. If it rejects 57.71, which was the FOMC top, and then the Thursday top, there's nothing wrong with shorting on a rejection, but be very mindful that we can blast right through and keep trapping on the shorts. The market is down off a 10% correction. It's more likely that we're going to work our way up on short covering, as market makers are going to say, oh, maybe this is the bottom. The divergence on the daily is still bearish. So that tells me this is just short covering because Powell did his job. He calmed the markets. Your job is to look at levels, not time, whether news or tariff or who's saying that. The market doesn't care. Look at where the market is, and we didn't get a rate cut yet. We're squeezing, right? So let the levels tell the story. Our guys also use dark pool. We use some other tools as well. We use a little bit of Elliott wave. If you want to join our Discord, please subscribe, like, and comment below, or email us, and we love for you to join the community. But what we do is we do smart trading. We don't do YOLOs. We don't push buttons just to push buttons. We sit on silence. Frankly, most of us didn't trade OPEX. We were long, and then a couple of the guys, saw that, hey, this is going to be a bullish close, and we took it based on some dark pools. But don't assume. If the level holds, you take it. If the resistance is hitting, you either sell or you short. I'm not a fan of shorting oversold or RSIs. I would rather, again, backfill this previous support 58.37 than take a risk on approach to coming down after CPI. March is usually bullish in, bearish in, bullish out, and it's proving itself. Does that mean that April will be bearish? We don't know. But again, so far it looks like March wants to finish to the upside. Let's see if Tuesday becomes a low and we defend this area, or if we collapse and come down back to 56.37. But as long as we're going up, you're risking on and buying these micro dips, which is on the 15-minute. We said we keep defending. We're breaking out against all these resistance lines. So the market is in fact covering it short and squeezing all the bears. So don't be the bear that gets squeezed out. Stay on the right side of the trade or sit on hands and let the market give you support. Every time I read it here, there's someone says to me, oh, there's no more trade, another drop comes in. But in fact, the market's going to backtest and possibly take profits, finish off the month, and then we'll see how April goes. But take it one trade at a time. Don't overtrade. Don't over push buttons. It is okay to sit on the sidelines if you missed out. If we're having a breakout, okay, let the market break out. And then you say, okay, well, at 58.13, then, I'll take my short, but don't short in the middle when we're on our way up. You're better off shorting if 57.27 fails like it did on last week, Tuesday, and how it started off on Friday. It started off as a rejection, and then it turned out to be a bear trap. So wait for the level to break or break out or become support. When you're in the middle, your job is to sit on sidelines. Put an alert. At 57.27 fires off, you look at the screen. Does it look like it's going to go up? Does it look like it's going to go down? If 58.13 bings on your screen, hey, are we at resistance? Or 56.37, hey, are we at, a level down of support? Let the level do the work so you're not clicking it maybe and losing premium and losing money, while you're trying to, make a couple of base hits here, in the business. So good luck this week. Stay tuned and we'll keep you informed.